Welcome to Go Lofty Business Radar, the pulse of global markets, decoded for decision makers. If you're a business owner, executive, or strategy leader, this is where we unpack economic shifts, connect the dots, and help you act, not just react. Today's episode covers a chart that's raising eyebrows and triggering boardroom conversations across the world. The S&P 500's 3% plunge following Trump's surprise tariff announcement, and what it means for your strategy. Let's set the stage. On Wednesday, President Trump announced unexpectedly steep import tariffs, far higher than what markets had priced in. The result? The S&P 500 dropped more than 3% in a single day, and US stocks are now down 5.4% since his inauguration. That's just the headline. The real insight lies in how other countries' markets responded, and what this divergence tells us about global confidence, resilience, and exposure to American policy. Take a close look at this chart titled Stock Markets Since Trump's Inauguration. Here's what it reveals. Japan is down the most. 9.7%, United States is next. 5.4%. In contrast, Germany is up, plus 5.2%. China, surprisingly, is in positive territory at plus 3.1%. Canada and the UK are holding ground, around plus 0.4% and plus 0.1%. This shows a clear split in market confidence. Economies heavily tied to US supply chains, like Japan and Canada, are being pulled into the turbulence. Markets with more resilient or diversified economic positioning, like Germany and China, are faring better, or even gaining. This is more than a market reaction. It's a strategic signal. If you're running a business, whether it's a fast-scaling startup, a regional distributor, or a multinational brand, this matters. Here's why. Cost volatility is coming. Import tariffs drive input costs higher, especially for manufacturers and retailers. Prepare for margin pressure across supply chains. Consumer prices will rise. Higher costs, higher prices, possible drop in demand, especially in price-sensitive segments. Investor confidence may dip. If you're fundraising or prepping for an exit, note that investor appetite often cools in high-volatility moments. Geopolitical risk is back in boardrooms. Executives need to factor policy shocks into their expansion plans, especially in US-dependent sectors. Let's break it down by business type and exposure. Most vulnerable right now, US-based manufacturers with high foreign input dependence, startups with razor-thin margins or hardware sourcing from China-Japan retailers operating in cross-border logistics, SaaS and tech firms relying on global infrastructure and chip imports. More resilient players, firms operating in single-country markets with domestic sourcing, businesses with digital-only models and minimal physical goods, European-based companies with lower US market exposure companies, already executing local-for-local production strategies. Where do you stand? It's not about panic, it's about preparation. Here are 5 lofty strategic moves to consider. Reevaluate supply chain risk exposure. Map dependencies on tariff-impacted regions and explore nearshoring. Run cost sensitivity simulations. Understand how pricing shifts will affect your unit economics and profit margins. Rethink expansion plans. If you're launching in the US or relying on US consumers, adjust GTM timelines or messaging. Strengthen financial runway. If you're raising funds, secure capital early before valuations take a dip. Communicate proactively with teams, partners, and customers. Share how you're navigating the turbulence. Build trust with transparency. The S&P 500 isn't just a line on a chart. It's a reflection of expectations, and right now expectations are shifting. The US market is signaling concern, while regions like Germany and China appear more optimistic. That doesn't mean you abandon the US, but it does mean you build optionality into your business model, your sourcing strategy, and your go-to-market decisions. At Go Lofty, we believe that great strategy comes from reading the signs, not reacting to the headlines. If you found this insight useful, make sure to subscribe, share it with your leadership team, and check out our latest frameworks and checklists at golofty.io. Stay informed, stay focused, and as always, go get them.